Another bank teeters on the edge. We've got failures left, right, and center. I'm going to bring you the information you need to know. The Federal Reserve, as I record this, is just about to announce potentially an increase in their interest rates again in order to stop this inflation that's taking hold, has been entrenched, and is absolutely not transitory. Are you ready for this? You came here for the truth, so let me unveil that for you. I want to show you some things that I believe are critical to you as an individual, your retirement account, your stock portfolio, your real estate, everything. Fed will decide next rate move after bank jitters. The Fed will release a policy decision on the heels of another bank collapse. So we've got several banks that have collapsed right now. And if you total it all up, can you believe it? It's bigger already than what we saw in 2008. Now the economy has grown and certainly the population, all these different things, but it's still something that is significant. And we're in the middle of it as we speak. Okay, so if they increase, if they don't increase, regardless, the interest rate is around 5%. And so we have not seen that for many years. And this creates a tightening. That tightening means there's less borrowing going on. But you might see in your own residential area saying, hey, I saw that house sell. I saw that house sell. A lot of that is on the commercial side, which you wouldn't see. And so this tightening is taking place. And that means there's a less borrowing, less of those billions and billions of dollars moving. And there's one thing about currency that has to take place. It has to move. It has to go through this like a current, or else it gets stale and stagnant. And that's when you start to have failures. Guess what? We've already got a few of those today. Let me show you some info in this, as well as some other articles that I've got to show you. I've got the data you need to know, okay? The risks to the financial system loom large, but inflation also remains stubborn. So they have to decide, what do we want to do here? We've got some bank failures that are actually in the middle of all of this rate increases that crushed them, just like SVB, a perfect example. But I will tell you, I'll hint to it in this video. I created another video previously, which you may have seen, and I'll link to it at the end of this video. So stay tuned for that, why this could literally happen tomorrow and the day after and the day after that. But you've got to realize that what we're experiencing, very serious stuff. Stay tuned. Let me show you this. Some of the banking sector tumult stems from the Fed's rapid increase in rate over the past year. Central banks are expected to lift their rates above 5%, up from near zero as recently as March 2022. So in a year, they basically increased 5%. We haven't seen that before. Now you get that in some developing nations, but you don't see that often cases with the United States, at least historically. But we had some unprecedented times, right? 2020 was crazy. They locked everybody down in cages, and they made people, from 2008 and 9 believe that the Federal Reserve is always going to backstop any losses. And so that's kind of where we are at today. Inflation is taking hold. It is entrenched, as I said, and it definitely is not transitory. And that's part of the problem. They claim that inflation would be transitory, and yet we know it wasn't. Anybody watching this channel knew that it wasn't, and I told you that they would increase interest rates. They would do so. I said that. I said it over and over and over again, and very few people out there said that they would do it. Let's be honest about that. Very few. They said, well, they can't. It's going to collapse everything, so they won't do it. But guess what? They did. And now we are feeling the effects of it. Now, they need to keep interest rates at least a moderate level for an extended period of time, to weed out all of the risk-taking, all of the gambling, all of the nonsense and garbage. And we need that, what I call in my first book, an economic detox. And if we don't get that, it's just going to pop up again and again. And every time it gets worse, through the cycles, things get worse. And that means your retirement account is at risk. That means your stock portfolio, your real estate, it's all at risk. And so hopefully they will maintain these high interest rates. But in the meantime, you've got companies that are failing. Half of America's banks are potentially insolvent, and this is how a credit crunch begins. So there is Jerome Powell, and you see that the twin crashes of U.S. commercial real estate and the U.S. bond market have collided with a $9 trillion uninsured deposits in the American banking system. Such deposits can vanish in an afternoon in the cyber age. So we know what happened. Billions of dollars were fleeing out of SVB and these other banks rapidly. Almost half of America's 4,800 banks are already burning through their capital buffers. They may not have to mark all losses to market under US accounting rules, but that doesn't make them solvent. Somebody will take those losses. It's spooky. Thousands of banks are underwater. Let's not pretend that this is just about SVB and First Republic. A lot of the US banking system is potentially insolvent. Like, think about how crazy that is. Okay, so you're not going to see that on a stat. It's not going to come up. You got to watch the money GPS to get this kind of stuff. I think it's pretty clear, and it is pretty obvious that when you look at it, there is a crisis at hand today, right now, right here. It goes with the regional banks, and guess what? The regional banks are loaning approximately half of the amount to commercial real estate and other endeavors. So of course there is a problem, because suddenly all that credit tightening has an impact on these regional banks. The regional banks start toppling one after the other after the other. So of course there is a crisis, and it cannot be resolved by simply increasing deposit insurance. Oh, it was 250,000. I got an idea. Let's just say unlimited. Is that going to resolve anything? Of course not. Of course it's not going to do so. So that's where we are at today. Apple reportedly attracted $1 billion, $1 billion in deposits into its new high-yield savings account in just 4 days. Look at that. I mean, when you're offering over 4%, surely people are going to take it on, 4.15%. So they'll say, hey, I'll leave my money over there. You got Goldman Sachs and Apple teaming up. I trust them. They've got a lot of cash on hand. I trust them more than SVB or Signature or any of these other companies, right? That's what the stage we are at right now. Regional bank stocks fall hard. Why now is a mystery. And so that's what this Barron's article, apparently the individual is just clueless about what's happening, but I think I've made my point already. It's that when you do this tightening cycle, you encounter problems, and we are experiencing that right now here at this time. Don't look for the articles to be written to tell you exactly what's happening. It's just not the case. It's not going to happen. PNC promises up to $15 billion in short-term debt to provide additional liquidity. So some of the banks are coming out there and saying, hey, we'll make sure that everything's all liquid and everything's all good. This is a regional bank. And they're basically just coming out and saying that. I thought it was interesting. PNC was one of those who made an offer to buy up First Republic. And then JP Morgan, of course, scooped that all up. So I want to talk about one other aspect here. Check it out. The economy, the job situation, what's happening. 14 million jobs worldwide will vanish in the next 5 years. We could see that if we do not get ready for what's happening today, we're going to be left behind. Inflation every single day is eating us from the bottom. Do you really think that the Federal Reserve is going to take care of inflation? Or are they going to take care of their banker friends? Are they going to help out JP Morgan? What do you think? So if we believe that inflation is like a fire just burning us from the bottom, and at the same time we've got the value of our currency basically depleting every day, our bank account is being erased, essentially. Well, then we have to make sure that we are positioned appropriately for this future. The vast majority of people are not. They are saying, well, you know what? I'm just going to put money into my 401k, my retirement account, and then I'm going to just work at my job, and I'm going to hope that everything's a-okay. This is a big mistake. This is not enough, okay? This is not, the pension funds of the old days, where you can just work your 30, 40 years, you retire, you claim your pension, and you're going to be okay. Let's face it, it's just not going to pay the bills. Learn about the pillars of prosperity if you so dare. Nordstrom leaves downtown San Francisco, joining the big city retail exodus. Why? Dwindling foot traffic. More people are buying stuff online. They're just not coming into the stores. Commercial real estate, of course, directly impacted by this. Hint, hint. Rising costs, inflation, and surging crime. Do I need to say more about that? So of course, this is just one company among others that are shutting their doors. Pay attention to this. Commercial real estate's one that you definitely don't want to be involved in, or maybe want to pay attention for some deals, I guess. Rising costs, that means inflation. That means rising wages as well. This is going to hurt the bottom line of companies. So look for the companies that are going to be less exposed to this as an investor. Okay, lots of tips. You stayed to this part of the video, you get the tips. And what else does that tell you? It means that some cities, they have too much crime, they're going to degenerate, and it's going to be a problem over the next few years. You don't want to own real estate in these places. You don't want to open up a business in these places. Writers Guild of America calls a strike. This is just one more, and I believe, quite frankly, as they mentioned in here, look, AI, artificial intelligence, is going to do a better job than them. So what do you think is going to happen over the next few years? Planning approvals have plummeted. The only reason I mentioned this was as we see inflation picking up, we see the prices of homes going all real crazy. What are the fundamentals? What is the supply and demand factors? Not just for real estate, but of course you see this all throughout. And this just happens to be that one example. So you got to realize that there's like a pipeline, right? For housing prices and so on. There's inventory there. This just shows us in the UK, major residential development decisions granted in England, it's just been declining for years. So that means that they can apply upward pressure on the prices for an extended period of time. Inflation is clearly there and they're not doing anything to help you, that's for sure. This is a video that I want you to check out. I will have it up on the screen right here. The banking crisis can happen tomorrow. It can happen the next day and the next day and the next day. This is why. Click this video and I'll see you there.